Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 4th of October, 2023, getting on the 5:50 p.m. Central Time. Now, I did something different that I've never done before. And I created for you a special report that you're going to be able to see on the website. Now, let me get this going from fresh so you can see it. It's on stock indices, as you can clearly see. But what about the stock indices? Instead of me doing bar charts and putting on the moving averages and the price counts, I went right to the Moore Research Center and I looked at 30, 15, and 5-year charts laid out on each other day by day, taking you right through now until Christmas time. Why? Because I want to show you the probability as to what happens between now and then. And I want to show it on all the time sequences so you can get an idea. I luckily was very good in my last report in the stock market. I was calling for a break in September in my special report, and we got one. Now, what am I saying at this point? I'm not going to spill the beans. How do you get it? Well, if you can't get it, you call my staff. But you go to iraepstein.com, IRAEPSTEIN.com, under the word research. You can move your cursor if you're on your PC up here. It'll take you right there, and that's how you go about viewing the report. I can't make it any easier. The report is up 3 business days. After that, it's history. Don't ask us to send it to you. We will not. We don't want it passed around. We protect it. That's it. And if you can't watch it in 3 business days, I don't think you're interested in it. Does it have historical value? In the end, it's all about seasonal charts, so it may well. Okay, so let's talk the markets. So today we had a bounce day, and tonight we're immediately coming down. Bear market plays don't end 1, 2, 3. They test, they spin, they beat you up, and that's what's going on. On the energy markets, they're bouncing, but, they came crashing down today. Now, I was watching Cramer, and he's going, it's lack of gasoline demand and this and the tax with the high interest rates. He has a point, but he's not completely correct. I think the event that broke the market in thinking about it was I read an article, and I wrote about it in my review last night. Not today, last night. Yesterday. And I said, I'm hearing reports that both Russia and Saudi Arabia agreed to produce 800,000 barrels a day more than we were all told in the month of September in oil. Well, hold on. The whole idea of the rally was there's production cuts to the end of the year. We haven't heard that these two had changed it. All they did is make commitments to each other that those cuts would stay in place. Well, I guess that they lied on one side and they didn't lie on the other. My production cuts are staying in place, but I'm going to produce more, but the cut's staying in place. Which part of the grammar do you want? The market read through that, and I think today's huge break was in large part showing you can't do that. Could I be wrong? I could be 100% wrong in my analysis. I don't think I am, but if they produced, and that's the report I read, if they produced that much more oil, yes. If they didn't produce that oil, then the market fell, as Cramer said. I think I'm on the right side of it. When we take a look at the S&P on a weekly chart, so here we are down 0.79% at the beginning of the week. Now, last week you got the market down pretty good too, because last week you were down 0.81%. The week before that you were down 2.91%. The week before that you were up. So 2.91, 0.8, and we don't know where this week's going to end up. So, it's quickly dropping off. Now, remember, we peaked out. We had a small rally back, but from top to bottom, this market has taken it on the chin from 45.65 on a daily basis to today's low. Today's low in the market, let's see if I can get us over there just so you can see it, so we can subtract that. Today's low is 42.3575. So 42.35, 340-point break. I call that pretty big break. I don't know about you, but that's pretty big, okay? And now what the market is trying to do at this point is consolidate and hold that a little bit. The trend is measured by the swing line is clear to the downside, lower highs, lower lows. The market is under the 18-day average of closes, which just had a bearish crossover when it got under the 100. The battleground, I know you won't agree necessarily because you got under it. Just getting under it doesn't mean anything. It's the 200-day average. Think of what a 200-day average is. It's almost 1 year of trading. I mean, it's big. How many business days are there in a year? Think about it. And that's where you're fighting along with the Bollinger Band. So when you hit that combination right there, yes, you got under it a little bit, but you haven't really gone anywhere just yet. You could, but you haven't done it at this point. And you have what we call the locked-in embedded downward momentum. Embedded means locked in. So until this number closes over 21, the pros are probably selling short into this, looking to see if the market keeps making lower lows. At one point in time, it won't work. But so far, that one rally certainly paid off in spades when the market got embedded. What about the micro mini NASDAQ? Not embedded. Whole different game. Trying to be short the AI part of the market is difficult. That's the point that the market is telling you, not me. The market is telling you. That doesn't mean it's not in a downtrend, but it's not as clean as the other markets that have the bearish embedded readings, doing exactly what we just showed there and doing it again in the Russell. Once you step away from AI, that is what's taking place. Now, when we come to the 10-year notes, this has been classic. Embedded reading hits the bands and bounces away. But there's something happening. The close was 1677 today. Tonight, on the first prints, we're at 22, and you're down a point. That's unusual math. I don't recall seeing that too often. In fact, I don't recall seeing that, where you jumped 5 points on just being down one tick. So the market might be screaming at us and giving us a warning that this market is ready to lose its embedded reading. If it does and doesn't regain it right away, the odds favor wherever the 18-day average is, probably a couple of days from now, that's where the market might be headed on a relief rally. What about in the 5-year? Doesn't have the embedded reading. Now, it lost the reading. Let me walk you through this so we can take a look and I can explain it as you see it. I hate when I sometimes have to have you visualize. It's just so much easier to do it this way. You lose the reading. Got it? You had an embedded reading, you lose it. Unless the market takes out this low, the odds would have favored going back to the 18-day average. But if it takes out that low, everything's out the window. Market goes for that low. The next time around, if it loses the embedded reading, it's often, I wish I could tell you more than the word often, a bear trap, and the market tries to catch people and give you a surprise rally. That's what the market is trying to do. That's all that I could say about it. In the dollar index, well, if interest rates start declining, be a little bit careful here. The dollar is still a buy on a pullback, but if you lose the reading, away you got to go in the market. If the dollar's a buy, the euro's a short sale on rallies. So it's one or the other. What I teach traders is ideally you don't take positions in both. It's one or the other. When I look at the British pound, the market is flirting. The word is flirting with losing its embedded bearish reading. If that's the case, it favors another rally. I saw that today, and I was writing up in the morning subscriber my morning full research report. That's what I should say. The idea of going short. And I'm looking at it, and I'm going, it will take very little to lose the embedded reading. I'm going to walk away from that. I'm glad I did. In Bitcoin, the market is still in an uptrend. It's fighting resistance here. As I understand the court, the SEC lost today a case against Coinbase where it can't appeal a ruling that happened. I don't understand the legalities of it. The court said they can't appeal it. Why? So there'll be more about that. I don't understand enough about it. In Brent versus WTI oil, will we get a widening of the spread back to $1.04? I don't know. that market's going to just sort of sit here and give us an idea as to what it wants to do. I don't see anything to do with it at this point. In Brent, as we look at the market here, we've got higher high, lower low, and the very first move outside of the Bollinger Bands since way back here, mid-September. Is it going to stay outside of it? Again, I think you failed today for the reasons I started this off with. Same in the WTI. Will it be able to snap back? They're oversold. This is the first step out on the downside, not the upside, on the downside out of the bands. Often it's a false move. We'll see if that's the case. And in heating oil, I got my butt kicked. This is a market I didn't think was going to do this. On the weekly charts, you've got to see if you can make a sharp snapback, otherwise no. And what I'm learning about weekly charts is they're fun to plot, fun to look at. I don't think you can handle the financial risk when a trade goes wrong because you've got sometimes a broad range on a week and you're adding another week. Sometimes those risks are just too big. I think you got to stay with the daily chart, but watch the weekly as your filter on the daily. But I'm just questioning it. I watched it. All the winners you get can get wiped out by one bad trade. That doesn't make sense, and I don't know a way to cut that down. In the natural gas, higher lows, higher highs, and the market stalls out right against the upper band. Okay, but I don't think that'll keep early birds from buying this market at 294 roughly, with stops under that 282, and seeing if there's any reality to the uptrend. This is a big area of resistance. You haven't been back to the 100-day average since the very beginning of September. But if you get over it, that's telling you a story that something's getting very bullish. So you put it together, you try to come up with a game plan that makes a lot of sense, and that is where I'm telling you, why not take a look at my stock report? Move your cursor up here, iraepstein.com, under the word research. 3 days, business days, you have to view it, then it's gone. You take care.